Hello, welcome to this video. Before we get started, please read the disclaimer. Trading is risky. Please do your homework. This is not trading advice. Alright, let's get started. Okay, welcome to the video on entries. So, for entries, we're going to start looking at the channel concept, because in order to get how it works, this is the main thing we're going to have to look at. So, Turtle uses two variations. They use a 55-day channel and a 20-day channel. So to start off, to make it simple, I'm going to just look at a 5-day channel. A 5-day channel is essentially this. Look at your current day. So this is our current day. Count back 5 days. 1, 2, 3, 4, 5. So here we go. From this bar through to this bar. From here we want to look at the highest high. What's the highest high that's been put in? And we see that this day here, sorry I can't get it, this green bar here, the high is at 35,648.1. So this would denote the channel's high, and the low would be what's the lowest day of these 5 days. 1, 2, 3, 4, 5, which we see it's right here. For this bar here, that's the lowest. So for this trading day, that would be the 5-day channel, the high and the low. So the 20-day channel is the exact same idea, except you're going to count back 20 days. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. So here's the last day. Again, we look for the highest high, which is the same level up here, being on this bar. And we look for the lowest low, which again, within this 20-day range, is right here. So you can see that it'll get somewhat tedious, especially if we want to count the 55-day range. We'd have to go back 55 days, look for the highest high and the highest low. So most trading platforms have some kind of indicator to help us do that. So let me see if I can find it here. Insert indicator. And the Donchian channel is the one you're looking for. So you can take a look. The turtle trading strategy is based off of a strategy made by Richard Donchian. Sorry if I'm not pronouncing that correctly. And this will calculate the values that you're looking for. From our example, when we counted back 20 days, we noted that this bar here created the high of the past 20 days, and this bar here created the low of the 20 days. So in order to use this channel for this given trading day, look at the previous day, and you see that the low and the high of the channel coincides with the high and the low that we found when we counted back 20 days. Now if we were to make this into a 55-day channel, we can just change the settings. So before I do anything else, I usually format it just to make it easier to look at. So what I do is I do not need the basis, which is the middle of the range, and I do not need a background. So when I plot my charts out, it looks something like this. I simply have the high of the range and the low of the range. If we wanted to have a 55-day range, we just need to change it from 20 to 55. And as you can see, the high for this trading day, I go back the previous day, the high of the range has remained consistent with what it was before. However, you can see that the low has dramatically dropped down here. And if we were to scroll back, we'll see that this low on this particular bar is the lowest low of the past 55 days. So that is how you get the channel. So to use the channel is quite easy. So let me just change this back to the 20-day so you can just see it easier. So to use the breakout, we look at the previous day. The previous day's channel high and previous day channel low form the price areas that we are interested in. So if I were to draw a line on here. Let's just make this a different color. I'll make it red. So again, I'm looking at this point of the channel on the high, and I'm looking at this point of the channel on the low. So I'm just drawing in these so that you can easily see what we're looking at. So on this particular trading day, if the price were to break over this channel and say hit this red line, then this would be a long trade. If price were to go below this channel and say hit the red line, then that would be a short trade. That is how we use the breakout to get into our initial position. Now there are two variations that can be used for entry. We can use a 20-day entry, or we can use a 55-day entry. So in order to use the 55-day, it's the exact same process. All that's different is where the channel is located. So here, looking at, again, if this is my trading day, I go to the day before, here's my high, and now you see here's my low of the channel. So my trade would initiate from down here. So I hope that explains how we get into the initial position. Okay, so let's walk through a couple more examples to see how this works. So let's just jump to another market. So here we have, again, if this is our trading day, we look at the previous day. Here's the low. We will take shorts if the price breaks below this level. We will take longs if price break above this level. Gold. Current trading day, look at the previous, price breaks below, we go short, price breaks above, we go long. I think you're getting the idea of how it works. Current trading day, previous day, price breaks above this level, we go long, price breaks below this level, we go short. And that's all there is to it. You choose your 55-day range or your 20-day range, use it, any breakout to go long or short.